Welcome to the Apartment Educators presentation today on our webinar, How to Prepare for the Investing Opportunity Ahead. My name's Devin Elder, and Abel Pacheco is also on to host. We'll kind of intro ourselves here in a minute. I do want to say right out of the gate, we want to take your questions. We love Q&A. We think that's a real important part of these presentations. So start hammering us with questions as soon as they occur to you. And you could do that. On this slide, you're going to see that Q&A box down there at the bottom of your screen. So use the Q&A box. It's better than the chat box for questions. It's specifically designed for Q&A. So as questions occur to you throughout the presentation, go down to the bottom of your screen. There's a little Q&A box. Hit that and fire away. We want to get all you guys' questions answered. So just do it as they occur to you. And then at the end of the presentation, we're going to answer them all for you. Just some housekeeping there. So we will kind of get started with some intros, but I don't want to leave Abel out there too long. Abel, do you want to maybe talk about the vision for our monthly meetups here?
Yeah. Hi, everyone. Thanks for joining us. We appreciate it. So Abel Pacheco here. Really, we began a multifamily specific meetup here in San Antonio, Texas. It's where we live locally. And we wanted to create, one of the largest or the default multifamily meetup here in Texas. And San Antonio, we were going pretty well right before the pandemic kind of issue happened. So we decided to transition to these live webinar events, which are really nice because we are still going to broadcast after we kind of come together in person, continue this part. So other investors or other operators, other individuals trying to learn more about multifamily outside of San Antonio can also join. So that was a benefit of it. But really, we started the meetup with a vision in mind. We wanted to be able to provide education to our current investors and future potential investors. We wanted to provide that education so everyone understands how we're actually putting apartment complex investments together in multifamily syndication. And then we wanted to be able to network with other partners and other future potential investors. So you'll find if you learn enough about multifamily syndication, SEC puts some rules together on having existing relationships, pre-existing relationships. So this is a really great ecosystem or a way for us to come together, both people to looking to invest, people trying to get into deals for their first time, or an expert or a pro that, just trying to break into San Antonio. It's a good opportunity for all of us to come together. You'll learn also that multifamily is a team sport. So it really provides us the opportunity to meet our, future partners as well. So that was the vision here. And since the pandemic started, we've picked up the cadence from once a month to every other week. So we're doing these bi-weekly. And we do this one during lunch, and then we have another one in the evening. So yeah, we look forward to at one point in the future, shaking hands and coming together, or just a little bump or however, you just looking somebody 6 feet apart, however you want to call it. But we're excited to come together in San Antonio, and thank you for joining us for today's live webinar.
Awesome. So a little bit about Apartment Educators. As Abel touched on, we are a platform and an ecosystem. So what we do is provide coaching tools, the team, the network, and the framework for people to go out and invest in apartment buildings as a passive investor, as a sponsor, as one of the many team members involved, wherever they see fit. So it is a complete ecosystem. These are some of our students here in the photo. We are accepting applications now for a couple of limited spots we have open. If you're looking to accelerate your investing journey and plug into all these tools and shave maybe years off your trajectory there, we've got a couple of spots. If you're interested in that, you can go to apartmenteducators.com to register.
I'll add on the apartment educator side. If you have been thinking about to join a program but not sure which one, let us know if you have any time to discuss. I myself have gone through about 4 to 5 different programs, paid for mentorship, coaching, joined a couple of masterminds, and I can attest to apartment educators, having been a student and now also a coach. solid program to trying to get your first deal done and continue on, in that path. So look forward to having us. So maybe I'll kick it off with about us on this side. So my name is Abel Pacheco. Thank you very much for joining again. I'm the president and principal of 5 Talents Commercial Real Estate. And, really just so you guys know a little bit about me, I'm from Corpus Christi, Texas, originally. I grew up there and moved to San Antonio. So half of my life near the beach and half of my life here in San Antonio. And I've been in IT or professional IT sales for some number of years. I worked rack space locally here in San Antonio, Texas. And that was a good 13 years, my professional career. I've been investing since 2008. And although I had some really great runs in my professional career, went from $5.7 million in acquisition to $57 million in acquisition, I really realized that if I was going to create a legacy wealth for me and my family, it was not going to be through a W-2. It was going to be through investing in real estate. That was my goal. And since 2008 till today, me and my wife are invested in about 800 doors. So we're in about 4 apartment complexes, and we're passive in 400 and general partners in about 400. And so it's really excited to share some time here. And the reason I like giving back, to this is like my mentors and coaches helped me through the process. So Devin was one of those individuals that poured into and provided some education, allowed me the opportunity to keep progressing my expertise and experience in real estate. And so now I have the opportunity to do the exact same thing and help somebody else up. So I'm excited, to do that, and look forward to helping any new investors and some experienced one. I'm looking for other partners as well. So a little bit about me. Nice to meet you all.
Awesome. Thanks, Abel. My name is Devin Elder. I'm the principal and founder of DJE Texas Management Group. We're an investment company here in San Antonio. I grew up in San Antonio. I'm married. I have 3 children and very familiar with San Antonio area. We've done over 200 real estate investment transactions in this market. And currently I have a principal ownership interest in close to 2,000 units of multifamily in San Antonio. So that business has really grown over the last couple of years. I'm here because a lot of the growth of our company has come through the right partnerships, and all that starts with meeting people. So there's a high likelihood that somebody on this call might be their first interaction with me or with Abel. And there's a high likelihood at some point that we go do a deal together and make a bunch of money, right? I mean, that's kind of the outcome of all this stuff that we're shooting for. So we like to do these networking events to not only help educate folks, but we might partner on a deal at some point, but that has to start with some sort of a relationship, right? So that's a big part of these. And that's why I like to come and do these things. And I do like, sharing whatever we can from our journey going through this that might help kind of the next round of folks to be more successful with their stuff. So a little bit about us there. Why multifamily? I'll just touch on this kind of at a high level. So we're going to talk about what to do to prepare for the opportunity ahead. But if some of you that are maybe newer to this space might be wondering why multifamily versus other investment vehicles. Number one, we're looking for returns, right? We're looking for cash flow, and we're looking for equity, same as you would get in a house that you buy potentially, right? We want both of those things. Multifamily is a passive investment for most folks. So we've got sponsors running a deal, but most of the folks involved are passive investors. They're doing nothing to have to run the deal. And that's really nice if you're retired or you have a full-time job. We've got some incredible tax benefits from multifamily that are not available in other investment vehicles. And then finally, it's a safe asset. So you're investing in an actual physical asset. It's land, it's a building, there's an income stream, et cetera. And so it's your capital is backed by physical assets. So those are kind of the 4 reasons why we like to invest in multifamily.
I'll add, Devin, on just one thing on the why multifamily. You'll find a lot of people that are investing in multifamily used to invest or maybe still do in single family real estate, but it's very, very active. And Devin mentioned passive investment. I started in multifamily while I had a full-time W-2 job. I kind of talked about that, but it really affords the working professional, a high W-2 earner, the ability to invest without having to spend a ton of time, if at all. And so the education part, this is your due diligence, educating yourself now. So part of the preparing for ahead, do the due diligence now, learning it so that when the right time, when the right opportunity comes up, whether you have a full-time job or not, you can participate in these opportunities without having to literally spend, a ton of time, if at all, on the deal. So.
Awesome. Okay. So we're having this conversation live as you watch it in basically the middle of May 2020. Now, maybe you're watching this recorded later on, but right now we're just kind of coming out of this COVID-19 episode that has shaken the globe, right? Shut down employment and lots of things have happened. So what's happening in the multifamily investing landscape? Most sponsors or operators are waiting. A lot of capital is just sitting on the sidelines just to see how things shake out. And in our firm, we made some drastic decisions a couple of weeks back that I won't really get into here. But, when the whole economic landscape of the globe turns on a dime, and we know that that's how these things happen, right? When it all changes overnight, it's prudent to just stop and wait. But as we get back to work over the coming months, we're going to see the impact on rents, on employment, and all those things. So most operators are waiting. Most banks are also waiting too, unless there's stabilized deals that are considered, safer for these banks. A lot of banks have changed their terms slightly on how they're doing deals. I could touch on that a little bit, but some safe projects are still getting done in terms of deals that are already full and operating well and haven't so far been too badly impacted by COVID. So that's what's going on right now. We do kind of think this is a temporary thing. We all want to get back to work, right? Those of us that have been working from home, we can't wait to get back into the office. Lenders cannot wait to go originate more deals. Brokers can't wait to close more deals. Owners can't wait to sell their deal that they want to sell. We're a seller and a buyer right now, my firm. We want to do both. We can't wait. We're just going to have to take a deep breath and hold on for weeks, maybe months. But there's things we can do now to prepare ourselves for when everybody gets back to work. So that's kind of a snapshot of what's going on in the current landscape. Abel, I don't know if you want to touch on anything additional there.
Just to add before we go to the next slide, I think as the title is, right, of our discussion, how to prepare for tomorrow. Well, knowing that things have changed, there are certain things that are still waiting to be fleshed out from the government, stimulus packages, second round of small business PPP loans, SBA loans, certain proposals that are out there. All of those things are just cause that temporary pause. But once we get, some idea of how, all of the unemployment, everything's affected our market, I think we're going to figure out, what exactly the new strategy or the new way forward as the entire, world comes together, for just eating restaurants. I think one step before the next one, you're eating at a restaurant one day, you're going to, some kind of event, next week, and you're going to, look at an apartment complex sometime afterwards. Right. And I think as everything comes together, if you move to the next slide, Ruben, that will help us, I think, determine what we can do to prepare. So spending time in your education is one of the things that I'm a huge proponent for. All of these items, if you invest in yourself, you have the best return. And at a time like this where it's a little riskier to move forward today, if you educate yourself today, you are literally going to de-risk your investment by having the knowledge of market, having the knowledge of the submarket, having the knowledge of your comparables, having the knowledge of how to analyze and interpret what happened on the previous T12 and the next future 12 months of this real estate investment. The more time you can immerse yourself in education, whether it's from a coach, whether it's a mentor, whether it's, from podcast, whatever you're doing, the more time you sow today, think of that as literally a monetary investment. It may not be 50 grand that you have to put down today, or that you have to, but it should be some value of your time, because your time is the most valuable asset. You never get it back. How do I invest that wisely enough so that I'm educated? So when the deals do come out again, the deal flow does start turning and America does start rolling, you want to be able to invest wisely. You want to be able to invest with more confidence. If you have more confidence in a subject, you are more confident and you're going to approach that investment in a much different way. So, on this subject, mentors and coaches, you can spend, there's a ton of podcasts. One of them, the DJE podcast is a good one. But you can have a ton of these different podcasts that are out there. You can search by and see hundreds of episodes. I'm now starting to do my own too. And what I learned myself is, if I'm on a podcast for 35, 45 minutes, I'm really listening for the nugget, 1 or 2 nuggets. And that was about 5 minutes worth of time. The rest is an entertainment story. It's really good. I want to hear how they started. But what are my nuggets? What am I pulling away from that? So I invest 45 minutes to get my 5-minute nugget. That was free. Or I can go pay some money and get one-on-one coaching, one-on-one training, some very specific targeted next steps, have somebody hold me accountable, make sure I'm taking action. And I pay for that, but it propels me to do much more quickly, much more efficiently, and doing it in a smart way. Myself, my story, I went from 2008 to 2018. I bought 8 houses in 10 years, but I ended up joining about 4 to 5 different programs, a couple of masterminds. Like I said, dropped a good 50, 60 grand on education. And all of a sudden I'm doing, 800 doors from 2018 to now. Very big difference of getting coaching, education, mentoring, than not having anything at all. So those are some of the things you can do to prepare on the education side, on the investment side of yourself, and how to move forward on your own. So let me pause here. And then Devin, I'm sure you have some good things on build your team brand and systems and tools.
Yeah. Yep. That's right. If you wouldn't mind going back one slide, I do want to talk a little bit about, well, actually, we're going to walk through each of these, right? So yeah, this is kind of an overview. So we'll talk about team, brand, tools, and preparation. So yeah, we can move ahead. So during this kind of pause period, right, your downtime, let's talk about investing in yourself and getting educated. Number one we have here is take inventory, PFS. PFS is a personal financial statement. I think any adult that's interested in furthering their financial situation should have a PFS, right? And this is something you should review quarterly. And what this is a personal financial statement. It has all of your bank accounts, credit cards, income, and expenses. And it's basically a balance sheet, right? For yourself, for you, you personally. What do you owe? What do you own? And ultimately, what is your net worth? Because the lender's going to look at 2 things. They're going to look at your liquidity, or the team that you're on together, but they're going to look at your liquidity. How much cash do you have? And this could be, savings accounts, checking accounts, actual cash, et cetera. And they're going to want to see, what is your net worth? What is everything you own worth minus everything you owe? So in real estate, we can stack this up very quickly. Even if it just is on paper, that's what the bank's looking at, right? So you want to understand all that stuff ahead of time, because understanding where your personal financial statement is will let you know, hey, what size of a deal can I go buy? And if I'm limited, who do I need to partner with in order to go get a deal done? So rule of thumb with lenders is they want to see a net worth equal to the loan amount. If you're borrowing $10 million, they need to see a net worth equal to $10 million. And if you don't have that, you partner with somebody that together you get there. You play the we game. So first step is to build that out. And the first time I did this, I was an adult, and it was eye-opening, right? And really a PFS, if you've never done it, might be the starting point in a journey for you to go, wow, I've got to get out of debt. I really do need to do a few years of Dave Ramsey, beans and rice, rice and beans, cut all my expenses to the bone. That's what we did when we started out. We did 26 months of beans and rice, man, me and my wife back in 2008, right? And we paid off everything, and it was crazy, but that laid the foundation for us to begin our investing career. So everybody's going to be at different levels, but you need to understand the snapshot, because you're going to have to share this with your lenders to get deals done. So education.
So I'm
Yeah.
sorry.
Yeah, go ahead.
Your REO schedule as well. So
Good
real
point.
estate owned schedule.
Yep.
You know, even though commercial is very different than single family, you know, those all account for your assets and liabilities. So you're listing down all your properties. And if you are a heavy single family guy, you know, beforehand, or single family investor, guy or gal, you may have this long list of properties that you want to start on today. The good part is once you've got it done, now it's a lot easier to keep track of. And this is, you know, something that you want to keep track of maybe on a monthly or quarterly at least basis, to always have prepared, always ready to go. And you're looking at, you know, your personal financial statement. How is Abel Pacheco Inc. doing on paper?
Yeah, you mentioned a good point, Abel, about preparation. This is not a fun thing necessarily to prepare. It's kind of like busy work, right? But you got to pull in your accounts, pull in what, you know, if you do own real estate, what the mortgages are, what your rates are, and you got to put all that together. But once you do that, and, you know, like for me, I have kind of a master file, right, for my PFS, and I can just, every time we, you know, buy or sell something, I can go in there and just kind of make the update. And it's a lot easier to update something that's already built. So if you haven't done it, you want to start and do that. And that's something free you can do right now. Abel mentioned listening to podcasts and reading books. Our, you know, coaching program as apartment educators, and we've got, you know, free components. We've got more hands-on coaching, et cetera. And then attending webinars, boom, congratulations, you're already doing this. So a lot of the stuff you can get started on without needing to go make an offer on a property. Repetition is the key here too on education, right? It's okay if you've heard something a bunch of times. Repetition is how your brain absorbs it and how you become an expert.
You can download your PFS, you know, on the internet, an Excel sheet, personal financial statement. So you can do that. And then,
Yep. Great question. Or your bank will have one for you. You know, you reach out to them. They've got a template. So let's talk a little bit about building your team. Apartment investing is a team sport because it's big, right? A lot of times, right? I mean, even if we're talking about smaller 20-unit building, that's still a large transaction, right? So you're going to need to build a team around yourself. And this is especially helpful if you're starting out, because you're going to get the benefit of just literally decades of experience that you can surround yourself with, right? You're becoming the CEO of this company. Let's say you buy an apartment complex. You're the CEO of it. You're the quarterback. But that doesn't mean you have to be an expert in absolutely every piece, right? So the team members at a high level, you're going to have a broker representing the transaction, the sale of the deal. You're going to have some financing, a financing member on your team. Now, this might be a bank that you forge a relationship with, or this may be a loan broker, somebody that has relationships with many banks, and they can go shop all the banks for you and advocate for you to get that deal done. You're going to definitely want to have an attorney. If you're bringing on investors, this is a requirement, right? You have an attorney that to handle all the legal work, especially if there's a capital raise or a syndication, and there are Securities Exchange Commission, SEC guidelines. You absolutely have to, have the attorney involved there. You may have a co-sponsor. So if you're newer, you may partner with somebody that is further along to get the deal done and find a way to make it mutually beneficial for both parties. And fortunately, this business model lines up pretty well to be able to do that. If you're less experienced, maybe you're doing more of the work and you're bringing on an experienced sponsor just to help get the deal done. And maybe they're getting some equity in the deal for not really doing a lot of work, but you're using their track record. So that's a win-win situation. If we're talking about a syndication where we're pooling capital together to go out and buy a deal, you're going to have investors. So you might have one sponsor on a deal and you might have 10 or 20 investors or more, depending on how big the deal is. There are more members to your team here, but these are kind of the high level ones. Another one off the top of my head is a good insurance broker. To get your properties insured. You may have a coach or a mentor. And in fact, you definitely should. If you're going to go be a sponsor, you should have a coach or mentor on your team. But my takeaway is you could start researching this now, build a little spreadsheet, or get a CRM, a customer relationship management software, and start identifying who may be on your team. Now, the first call you have with an attorney, they may not be your forever attorney vendor, but you can at least start having those conversations, because when you do get into a deal, things move quickly. You don't want to be making introductory calls at that point. You want to already kind of have the roster and your A team built. And over time, you may fine tune that, but you want to start having those relationships right out of the gate. And the best way for building a team member is through a referral. And you definitely want everybody on your team to have done it before, many times before. And that's what I talked about, decades of experience that you're tapping into across all your team members. That's how we get these things done.
Yeah.
So for branding, this is another activity that you can do and build while we're on the sidelines. So there might be some administrative stuff here that you've been putting on the back burner in terms of saying, am I going to start a company? What's it going to be called? Name, logo, colors. Do I need to get a .com? Do I need to get business cards? Do I want to consider having a newsletter or a podcast? I mean, these are things for a lot of folks that end up on the back burner, where now is kind of a good opportunity to start thinking through some of this stuff. And, I definitely want to say at a high level, if you are going to go sponsor a deal, you need to have a .com, and maybe it's something capital or something investing.com. You don't want to be, using a Gmail address. So, getting a logo these days on a website like Fiverr literally costs dollars. I mean, we're not talking about a $10,000 branding exercise here, right? It's pretty simple to do that, and then start sending emails from your professional looking website and your .com, because that's going to look a lot better than your Hotmail address, right, Abel?
Absolutely. You want to get your DNS going, couple bucks, and get your Fiverr logo. And I think those are all great things to do.
Yeah.
On the topic of building brand, you have a couple of those bullets, right? A deck, a white paper, a newsletter, a podcast. There's an interesting part of this as being an individual that's going from passive investing to I want to go do my own active deal, is you are going to start educating people through the process. And part of your brand is realizing what you stand for, how you build your investment opportunities, your conservative, your risk tolerance on deals, and all of that goes into your brand. So what one of the exercises that I've done, and I believe I'll continue to do throughout the months, quarters, and years ahead, is really consuming as much education from other operators, other investors, other syndicators, and looking at the topics and content that they create. Because what happens is you're going to start to educate yourself. You're going to come up with your own, potential theories or potential strategies or potential, the way you like to invest and the way you put a deal together. And that's the content that you're going to go create yourself. So I like to block off time, in my calendar, with Tuesday from 2 to 3 o'clock, an hour. And my Thursday is to write it up. My Tuesday may be, literally brainstorming 10 or 15 different topics that I may want to get educated myself on first, write all these topics down, educate myself, and search for the information, educate myself. Now, the beauty of the internet, you're going to figure that out. And then that can be part of your brand, is the content that you create on your own. So I think all of those things are really good exercises, not only for potential investors that you're going to be educating, and that's who you are, that's your brand, but also to educate yourself through the process. So it really does, it's a big virtuous cycle all the way through branding, education, and then having the right tools, which I think is on the next slide.
Awesome. I do want to touch on two things real quick on the last slide, the newsletter,
Sorry.
having a monthly newsletter and a podcast. I think these things are great tools. Just consider carefully before you start. What the kind of thing I used before I started a newsletter or a podcast was, can I consistently do this activity for the next 2 years, expecting no results, and consistently do it? And if the answer is no, maybe don't do it. Once you start this stuff, it's a train you're not going to get off of. So you don't have to have a newsletter or a podcast, but you don't want to start it, get a few months in, and then stop, because what we're trying to do is build a brand, build credibility. So think long and hard before starting either of those. You don't want to have a podcast with 3 episodes and then it's hanging out there in the wasteland forever. That looks bad, right? Newsletters and podcasts.
You told me that earlier this year, Devin, and I go, I probably won't start a podcast but while I've been interviewing on a few others to they've asked me to be a guest on,
Right.
I really consider that one carefully. I go, I don't know if I want to commit to actually creating the podcast and creating it. I think that the commit is part of it. And
yes.
So I started with the
consistency.
Make it simple.
Yeah. And you bring up a good point about guesting on podcasts. That you're just leveraging other people's platforms and work, and they might have a big audience already that you can tap right into. And that's better, right? It's to start. So that's a great approach. Anyway, just wanted to touch on those. We'll talk now about systems and tools. And this is a great opportunity that we're in this little lull right now where you're not maybe going out to buy a property or put a property under contract tomorrow. This is an opportunity to kind of build the tools that you're going to use to grow on. So we want to build systems and tools early in your career that can serve you for years to come. Not that you're going to be stuck on one system forever, but that is kind of the nature of some of these tools. Is once you get started on a certain platform, it becomes difficult to change, whether that's an email, marketing platform, or a CRM, which is a customer relationship management. You want to think through some of these systems and get familiar with them, because then you can kind of rinse and repeat. You can automate certain things, et cetera. So you definitely want to start out, I start out with a spreadsheet kind of tracking, hey, who's a list of attorneys I could use? Who's a list of insurance brokers? Who's a list of property management companies? Now we use, more sophisticated CRM software to track all that, but you got to have something. Same goes for an email database. If you're building up a database of folks that you might partner with or that may invest in projects, you want a clean, organized way to handle that. I want to touch on the investor process here. If you're syndicating a deal, let's say you're raising $1 million capital from investors, and you have a $50,000 minimum. Well, you might have 20 investors on a project, and you've got to think about that's 20 investors sending wires in. We need to confirm the wires, and you're going to want to look at the nitty gritty of the process. What does the bank confirmation process look like? How am I going to let investors know we receive funds? There's stuff like that you want to think through, because once you actually get out to do all this, it happens quickly, right? You're going to want to think through project planning and how you're going to execute a takeover of a property, and down to kind of mundane things like, what's your document management process look like? Are you going to use Google Drive? Or are you going to use Dropbox? Or what does that look like? But start setting all that stuff up. There's lots of other systems and tools, but you can kind of mentally go through the exercise of, how are we going to set up all our systems here, using templates wherever possible, using automation wherever possible, and start building that stuff while the stakes are low and you don't have to actually go perform it in real time. You can kind of do a dry run on a lot of this stuff.
And I'll add, depending on where you are in your investment experience and how big you want to go and how you want to scale, if it's you doing one deal and that's your lifelong goal to do that one deal, then it's going to be different than somebody that wants to go acquire 3 to 4 deals a year. And depending on where you are in that, I think that's kind of the first part, is what do you want to build? What are you trying to build at a high level? Then you're working backwards from that goal. So put your goal, you got to know your goals if you're going to build your system and tools. and figure out how much do I want this thing to scale. And if you are going to build a big business and go after it, or even, a couple of units or a couple of apartment units and have some other, real estate business, one thing that has helped is defining roles within the company and saying, hey, if I had a salesperson, they would do this. If I had an investor relations person, or they would do this. If I had an acquisition person to help me go buy deals, they would do these things, these activities. The acquisition guy would go talk to brokers, look at properties, and the asset manager is going to help me underwrite deals, make a pro forma, create that. The investor relations is going to help me, take the dollars, how to build an ongoing monthly system. And as you start to bucket each of these responsibilities, even if it's you and you're the only person doing all of these responsibilities, you can have that system from top to bottom and start to outline what you would want this, HR function to do, what you would want this property manager function to do. And then you can build a system or a tool to help you automate as much of this stuff as possible with any tools possible. This beauty of technology today is, and you may not need a salesperson, you might have an automated CRM tool that handles your first response, your second response, Calendly to set up a new meeting, as you don't have to start with it all today, but if you figure out, hey, this is where I'm at today, you start to build a system and that helps you for tomorrow.
Love it. Yep. That's it. So we've got our next meetup on May 20th this month. This is going to be a virtual event. We cannot wait to get back to live events. The team, Abel and I and the team were talking before about when's our next live event. We're raring to go. But for May, our next one is going to be underwriting an apartment project. So this is going to be really down into the nitty gritty, a screen share on some underwriting, and really go over our assumptions and how you look at the numbers of the deal. I think some people are going to completely zone out on this, and other people are going to completely love it, right? So I'm a little bit of both. I kind of straddle both worlds. So I do geek out on underwriting, and we're definitely going to get into that. So you can register for that at apartmenteducators.com/events. Be sure to like our Facebook page, type in Apartment Educators so you can see all our updates. And we're very active on social media as well. So be sure to check that out. I think we're going to jump over into Q&A now. We've got a little chat box at the bottom there to type in Q&A. We've got a few here that I'll just kind of address. The first one here real quick from Chad. Can you explain rolling over an IRA into multifamily? So an IRA is an individual retirement account. We just had a webinar yesterday actually with Quest IRA. I'd recommend you reach out to them. But we've got a whole webinar on it. Essentially, an IRA is an individual retirement account. A lot of people have them and are using them to invest, say, in the stock market or bonds or something. And a lot of people don't know that you can get what's called a self-directed IRA. So you can't, let's say you're below the retirement age, you can't withdraw those funds and just pop it in your bank account and do whatever you want, right? It stays in the IRA. But what you can do is set up a special account called a self-directed IRA, where then you can invest with that IRA in all kinds of different stuff, including real estate. So the simple process of how to use your IRA is, let's say you've got $100,000 in an IRA with your company. Well, you could call Quest IRA, have them set up an account for you for very nominal cost, transfer those funds over. Now you have $100,000 of investable capital, and you could put $50,000 of that into a syndication. So in our syndications, about 20% of the capital is from investors with IRA, like Quest IRA, right? So that's just a simple process of calling somebody like Quest, getting an account set up, transferring funds, and now you got those funds available to invest in real estate. I'm not the IRA expert, so I recommend calling them, but I've been doing this long enough to say that you can't use it for your own deal. So my understanding is you can't go flip a house for yourself with your IRA money. It's got to be somebody else running it. So that lends itself very well to multifamily syndications where, hey, you're going to let somebody else run the deal, but you could put some money in it. It's not like you need it back tomorrow. You can't get it anyway because you're under the retirement age, but you can deploy that into real estate. And then, the IRA writes the check to the syndication. The syndication does its deal. Let's say 3 years later, they sell, the money goes back into your IRA. So really nice way to participate in these things. And really the IRA money is capital that a lot of people don't realize they have. They might want to be investing in apartments, but they go, well, I don't have $50,000 to just write a check, but they might have it in a retirement account that they'd use. So that's kind of the high level on that.
And that's
that's
a great way to become more, to create more experience for yourself, educate yourself through the process, and to eventually, if you want to be a general partner or an active member in a deal, well, I invested in my first 400 doors passively through IRAs. My wife did hers as well, and so each time we did that, that was the opportunity for me to learn through the process, and it does resume experience. It is, riding shotgun, so to speak, through the investment process. And if you want to eventually raise capital from other investors, going through the process yourself, going through the paperwork, going through a PPM doc, working through a direction of investment, trying to figure out how to move everything from a 401 to an IRA and then into the deal. All of that is an educational process in of itself. So if you're doing that, it's much easier to help somebody else learn how they can do it, on a deal that you're running in the future. And I think that's helped me a lot, is actually, going through the process and being a passive investor. Because as Devin said, you can't be a principal, you can't invest with your IRA if you're a principal in your own deal there. And in the multifamily side of it. So this was a great way for me to deploy the capital, get the experience, get the resume side of it, learn through it. And then my cash I reserve for the deal that I'm a principal in. So I'll go through the next question while I'm here too. So, hey, Henry, how's it going, sir? In regards to tax benefits, how can each individual investor within their syndication team benefit with depreciation when they file their own taxes? There's a couple more questions. We'll take them one at a time. So the first one is really every investor is a fractional owner of the business, of the LLC. You get a K1 K1 statement, which is you're a business owner. K1 formal tax document that is prepared for every investor. So every investor will have a K1 at the beginning of the following year. You give that K1 to the CPA, and it's already broken down for a CPA to know exactly what your percentage ownership is in the deal, what your investment was, what your losses are, but we're all looking for depreciation and paper losses, which the investment made money, but we got to deduct some W-2 taxes. So that is through that K1 process, and that is completed for every investor. So everyone has a different look on it. The second part of that question is, would they need to have an LLC in place and file taxes under the LLC, or can they file without an LLC, C Corp? You can actually do it in your own name or an LLC. It's kind of the investor choice. By default, every investor that's coming into our multifamily syndication is in an LLC. There's the property LLC, so every investor is protected, and then the SEC part of it is the 506, B or C deal. It's another safety aspect where the risk is limited to the investment. No investor is on the hook for a $10 million deal. The risk stops with the investment amount, whether you're investing through your LLC or whether you're investing in your own name. I've done both, and really it was just, frankly speaking, one of my investments was about time. I wanted to put the money in. I was so close. I couldn't create another LLC, and I didn't want it. I was like, man, just make sure I commit and send my money in. I wanted the deal, and I didn't want to be left out. And then another one, I had the LLC in place, and now I've started creating a business track record in that LLC name. And if you're investing with your IRA, then it's already invested through the IRA. There's not another LLC you need to create. So there's a third part. I understand this may be more of a question and tax strategy. Yeah, definitely you still want to talk to a tax strategist, right?
For sure. And that's stuff you can do now, right? You can start having those conversations now to understand how you're going to tee this up, because we're not CPAs, we're not attorneys. We're just sharing our experience in this business, right? So you definitely, and we tell our investors that too. It's like, I could tell you my thoughts on something, but we have hundreds of investors and it's not our role to be tax advisors, right? So feel free to, give you some ideas based on my experience, but ultimately you want a professional in your corner that is guiding you on this stuff, right? So, but you can invest personally or as an entity. And we, like Abel said, we have folks do both. We got a question here from Gabriel. How would you recommend a non-accredited investor get access to more opportunities to invest in multifamily deals? So a non-accredited investor is allowed to invest in a 506B syndication, provided they have a pre-existing relationship. So you're looking to build relationships with people that are going to do deals. And really that's kind of one of the fundamental aspects of us starting Apartment Educators, is to do these events where we get 100 people in a room. Some of them are doing deals. Some of them want to invest passively, right? And to make those connections so that everybody can say, yes, we have a pre-existing relationship. So the short answer there is networking, right? And these events are helpful that we're doing over Zoom, but we're going to resume probably next month in June, some live events. And so, it can be fun to come out to those and learn, but really there's no substitute for live networking and meeting people and then grow. Even if you don't meet somebody that's running a deal, you might meet another investor and they could say, hey, I'm invested with this guy, and make the introduction. So it's as funny as it is in this hyper-connected, globally connected social media world, a lot of this still revolves on, relationships and referrals, right? So you just want to build your network, always be building your network is the answer to that question. Abel, anything to add on that one?
No, that's it. You have to network with other people. You literally have to have that pre-existing relationship if you're non-accredited. So you are asking for recommendations. You are looking in different markets. If you like the market that we're in, San Antonio, Texas, right? You're looking for people doing deals here. Well, let's say, I don't know, you found something in Indianapolis. Well, you start working with networking with somebody specifically over there. And you're like, that's where the networking, the referrals, the, shaking hands, whether virtually or physically, you're trying to figure that part out. So nothing to add there, but yeah.
Awesome. We've got a question here from Mark. What is the lowest net worth to get started? So that's a pretty broad question. If you're going to go sponsor a deal, you've got to have substantial net worth to buy a big deal. Again, the rule of thumb is the lender wants to see net worth equal to the loan amount. They're giving you a $5 million loan on a $7 million property. They want to see $5 million in net worth among the management team. So you don't have to have it all yourself, but you and the management team together are going to have that. So that's kind of the net worth requirements to go run a deal. To invest passively in a deal, there really are no spelled out net worth requirements. However, there is going to be something called an investor suitability questionnaire that says, do you have the financial wherewithal to invest in this project? And can you financially afford to invest in this? And if you can't, you shouldn't be investing it, right? Nobody should be putting their last dollar in a real estate investment and praying that it just blows expectations out of the water and makes you rich, right? That's a bad approach. You want to be using investable capital that you would invest elsewhere. Instead of investing in the stock market, maybe you're going to allocate some towards real estate, right? So you need to be in a financial position to invest, period, right? So there's not really a dollar amount there, but if you're going to invest $50,000 into a project with your IRA or with cash, that needs to not be your last $50,000. And you need to be okay not accessing that capital for maybe several years, because these are usually multi-year projects. We've got another question here. I think it's a question from Keith here. Passive investing through an LLC and this is, again, I want to kind of preface this by you want to talk to an attorney about this stuff, right? But we will kind of give you our thoughts on it. Every sponsor is going to issue a K-1 at the end of the year. So whatever you invest, you're going to get a percentage ownership of that deal. And so everybody that's got an ownership stake in that deal is going to get a K-1 with a lot of times a paper loss allocated to each investor based on how much they invested. So that, I think that's investing through an LLC. Do sponsors have issues with that? Not at all. Not at all. You can invest through an LLC. Yeah, absolutely. Absolutely. But don't let an LLC stop. I see a lot of people getting started, maybe in entrepreneurship, getting wrapped around the axle on an LLC. Here's how the LLCs work. If you're going to go sponsor a deal, you're starting a new LLC to buy that property every time. So you don't need to start that until you've actually got it under contract. So don't even worry about that. But if I go buy 123 Main Street, I'm going to go start an LLC called 123 Main Street LLC if I can get it, or 123 Main Street, whatever, LLC. But I'm not going to start that until I've actually got the property under contract. If I want to invest in a property, I can just invest in my own name, or if I've got an entity, I can do it through that. So again, talk to your professionals about that. But yeah, you can invest through a trust, an IRA, an LLC, individually. Is that all of them, Abel? Which ones did I miss?
QRP, solo 401k.
Oh yeah. Yeah.
All the fun ones. Yeah. There's a bunch of those avenues. There's another question too. Chad asked on the same topic. It's, what about Roth IRAs? Can you invest in those? And yeah, so I have, again, not tax or specialists or CPAs, but just experience. I have 401k that was Roth. I moved the Roth over to a self-directed IRA, like Wells Fargo, for example. You may have a, Roth IRA with them, and they say, oh, they may have a self-directed Roth IRA option. But if you ask them a further question, can I invest in real estate? The answer is no. You can self-direct whatever stock or option you want. But you're like, but I can't invest in real estate. So you have to take that Roth IRA into a self-directed IRA, a qualified, self-directed company like Quest we mentioned. And you can essentially put it in Roth IRA, direct that into the investment. And the second part of the question you had was, can you use that to invest and not have tax at the end? So again, the CPA default, I'm not one, but from the experience of it is, you're in a tax sheltered environment, and in the Roth position, you already have your money that you paid taxes on. Like, let's say as you fed into it, and I fed $5,000 a year into this Roth IRA. Well, it was already taxed, and I'm not taxed at the end. So every time you keep rolling it up and it gets bigger, let's say 50K, and it doubles to 100, you're in a tax sheltered environment. So you don't pay capital gains taxes. And because it was Roth, it already got dinged from the IRS for taxes. So you're in a better situation. So yes, it all works really well. And I think there's a bunch of different strategies on which one you want. And the tax strategists are really good on telling you, hey, I think you should use this for this reason, and here's why.
Awesome.
Well, those are all good questions. I think anybody else? Last question, last call. While we're waiting for any others, while we haven't quite solved for the networking part, we also have a meetup page on meetup.com. If you go to apartmenteducators.com on meetup.com, you'll see a lot of our members. There's probably about 108 people there that are registered. Excuse me. And you can go start a chat with any of those individuals. So that's a way to kind of networking in this time, and just kind of quick tip. So doesn't look like there's any other questions, but.
Awesome. Yeah. We're coming up about on an hour here. So we'll just reiterate on the next event. All our events, you're always going to be able to see them on apartmenteducators.com/events, or just Google Apartment Educators. Go to the website, you'll see the events right there. And we have events all the time. I mean, at least like twice a month right now, right? So be sure to come out. We can't wait to meet you guys. some more face-to-face here before too long. Check out apartmenteducators.com for anything else. I think we're going to wrap it up. My name is Devin Elder, Mr. Abel Pacheco. Thank you so much. And thank you all guys for jumping on. Have a great afternoon.
Thank you. Bye, everyone.
See you guys.